Good morning, everyone. It's 9:05 a.m. Here on the East Coast. It's Thursday, January 16th. This is Liam McMahon, the morning wrap-up video, talking about some of the price action we've seen since last night, specifically in the Aussie crosses, and then what we may be seeing today. So please take a moment to look over the risk disclaimer, which should now be on your screen. After you've paused the video to read it carefully, we will begin. Okay. Alright, so we're going to take a quick look at the Aussie crosses here. Last night, Australia reported their unemployment numbers, or rather their employment change. So Australia last month shed 22.6 thousand jobs against expectations of a gain of just over 10,000. The unemployment rate remained constant at 5.8%, but last month's numbers were downgraded fairly significantly from a 21,000 gain to a 15,000 gain, so about 6,000 jobs shed there. Excuse me. But we had a 30,000 job divergence between expectations and the actual number. And to be honest, the reality of those numbers are actually a lot worse than the headlines suggest. So a number of part-time jobs were added. I think about 9,000 part-time jobs were added. So the full-time employment loss is actually far greater than the 22,000 that seems to suggest. So the underlying number is not really helping out the Aussie either. And you can see the reaction that we got. We sold off from about 89 down to a low of 87.75 very quickly. And now we've been sort of consolidating there ever since. My plan for the Aussie is to try to sell a rally. I don't know if we're going to get a rally, but I really don't want to try to chase a move lower here. I'd like to see if we consolidate for a little bit longer. Fine, I'll think about it. But ideally, I'll see some sort of bounce up into the bottom of that former channel before a rejection. So that's what I'm looking for on Aussie. I think it's something like 70% of retail traders are long the Australian dollar, alright, which tends to be a bearish signal. When retail traders start adding into their longs on a decline like this, it tends to forecast further declines. So we'll see if we manage to get a bounce to sell on Aussie dollar. Keep in mind where we sit here on the weekly chart. Okay, this is a this obviously is an incorrect candle, but you get a general idea, alright, of the significance of this level. We are sort of dancing around a very significant support range, and if we break it, we could see a fairly substantial decline. Some of the other Aussie crosses, alright, Euro Aussie breakout retest rocketed higher, looking for new highs on this above 156. Pound Aussie, alright, invalidated its head and shoulders pattern and then just rocketed higher. That 186.95 area stands as a pretty solid resistance for this pair. But, you can see if you draw a triangle trend line here, alright, we've broken out. So there's your support levels down here at about 184.70. Your resistance levels about 186.95, so basically 187. Aussie yen, Aussie yen. Okay, selling off fairly aggressively, finally breaking out of its long-term consolidation. Alright, this has just been sloppy. We finally broke out of it. I would expect us to head down towards at least 91, alright, where we have these previous lows and this sort of congestion back here. And then, obviously, the resistance would be a move back up towards that area. But right now, Aussie yen not particularly my favorite. You can see dollar yen has moved lower today, alright, after some pretty standard U.S. data, no real major disappointments here. We had weekly unemployment claims came in at 326 against 327 expected. Consumer price index, core number 0.1 against 0.1 expected. The overall number 0.3 against 0.3. So no real disappointment there. We do have Philly Fed coming up in about 51 minutes, so 10 o'clock a.m. Eastern time. But the dollar has been suffering a little bit. You can see euro dollar turned up higher. I'm looking for a move below that trend line for a possible shorting opportunity. Pound dollar bouncing, retesting that trend line, still kind of just hanging out though. Dollar CAD, alright, has been fairly weak today. down 1/4% as we hit 109.90 is basically that 110 figure I think a lot of people were looking for. So this strikes me as sort of a profit-taking move. Pound CAD, all right, is actually pretty interesting here. I'm looking for about 178.20 to try to buy pound CAD. As we sort of sit on top of this wedge and sort of consolidate a little bit here. The one thing that's making me a little nervous about shorting the Canadian dollar, if we look at Canadian dollar futures, you can see that we do have some fairly significant divergence here, all right, on the 4-hour chart on Canadian dollar futures. So at some point, you know, we're going to see some sort of nasty oversold bounce on these guys, but may not be today. CAD yen is another one to look out for. I don't really have a great play on CAD yen right now. Kind of hoping that this, whatever it's doing now, will last a little bit longer, and we'll see some sort of pretty neat consolidation flag-like pattern here, and then eventually a break of this trend line to sell. So I'm keeping my eye on CAD yen, Kiwi yen. Okay, breaking down from the top of its wedge. Needs to get below 86.25 to really have a chance at a major correction. Kiwi dollar holding up pretty well here. We dipped a little bit below those previous lows, which or sorry, those previous highs, which I'm not a huge fan of, but we'll see if it manages to hold in there for a little bit longer. The other crosses, pound Kiwi, still looking for a move up towards about 198 to try to sell. And then the Swiss pairs. Swissy got pretty strong about maybe 8 hours ago, and it's been kind of strong since then. So you can see dollar Swiss 90, basically 91, 91.25 or so, holding up so far. Its support level, okay, 88, 89.86, and then 89.40. Aussie Swiss, all right, broke down pretty good. CAD Swiss wasn't a nice little bull flag pattern. Still kind of is. All right, you can see just a lot of chop now. Nasty reversal candle. Now we have the potential for another nasty reversal candle, although this candle is only 12 minutes old. So we'll see. Watching CAD yen for, you know, it's held the bottom of this channel. So I'm still looking for it to at least have the possibility to make it up towards the 85, if not 86 level. We'll see how that plays out. E-minis, okay, slightly softer today. Nothing really to get excited about. We did have two more important sets of earnings today. We had Goldman Sachs, which reported Met earnings, Met being fine, not great, and Citi, which reported disappointing earnings. Citi was down about 3% in pre-market. Okay, so we'll see how equities, the overall markets decide to handle that. Dow futures, okay, been talking about this level for a little bit. If we do manage to sort of break above, all right, this pennant here, really is a fairly bullish signal, and we should see risk accelerate. The problem with risk accelerating is that it hasn't been linked to a currency move very much lately, all right. You know, Aussie obviously has not been trading with equity markets. If it had, it wouldn't be down, you know, 40% on the year. So it's tougher to say exactly what risk is going to do for currencies. The dollar's been managing to survive pretty well despite risk on. So I don't know. We'll have to kind of play those two separately. But keep your eye on euro dollar for this potential break, and then watch those Swiss pairs to see if the Swissy comes off, if the euro comes off as well. All right, so that's what's happening. Happened the past 48 hours or so. Good luck trading going forward. Remember, 10 o'clock news, and then 11 o'clock news with Bernanke. All right, good luck trading. I'll talk to you soon.